This episode of the Paycast Network podcast is sponsored by Deja Vu, payment technology that helps you get ahead of the competition and keep you there. Thanks for joining us. Let's jump into today's episode.
Welcome into the Paycast Network. Today I have to my left the best beer in the business.
Hello, everyone.
James.
How's it going, Chase?
Great. How are you?
It's been a while.
I've been considering, no, it hasn't. I've been considering doing like an acronym for best beer in the business.
Okay.
Best,
What do you got so far?
Well, it would just be BBITB, right? Doesn't really flow. Maybe we should get rid of
You
it.
should keep
Okay.
working on that one.
Yeah, I'll keep working on that.
Keep working on that.
Other than the best beer in the business, we have with us Adam Niec
Hey.
from Rate Tracker.
How's it going,
It's
Adam?
Niec, right?
Yeah, niece.
Everybody says niche.
Yeah,
feel
niece
like
and
people say
nephew,
niche.
like niece and nephew
Niece
with
and
a no
nephew,
at the end.
Okay,
Yeah.
awesome. Well, Adam, thank you for joining us.
Thanks for having me, brother.
If you haven't seen already, we have a bunch of other episodes coming out with Adam. We have one that's going to be about Adam specifically, a spotlight, and a few others about social media, entrepreneurship, all that. So go watch the other episodes with Adam. Watch the
Good
other
stuff.
episodes with James as well, which is all of them. He's really great on all those. And before we start, what do we need to remind everybody,
Be
James?
sure to like and subscribe. Paycastnetwork.com/follow. You'll see all of our links there. We got Spotify, we've got TikTok, we've got Facebook, Instagram, and of course, you can see all the episodes right there on the site as well. So
That's
be
right.
sure to check that out.
Nailed that.
Of course, I did.
And the mailing list.
And the mailing list,
Join
which
the
is
mailing
also on
list.
the site.
Yes.
Yep.
Exclusive content goes out weekly.
Yep.
Paycast content.
Written by yours truly.
Who? You? No, not you. All right. Anyways, so Adam's here. Remember, Adam's here.
Hey,
James.
Adam.
So we are talking Rate Tracker and then more specifically Score.
Yes.
But before we do that, we're doing trivia. Woo!
No, the score
Come on,
part is at
James.
the end, so like we can't do like any competition because there's no score. It's like it's Rate Tracker and then score.
You better hope we're not keeping score
All right.
for trivia because you are terrible at trivia.
Intentionally so, I might add,
Yeah.
for reasons we've talked about.
Okay. All right. First question. The earliest recorded loans in history around 2000 BC in Mesopotamia were not for money, but were for what agricultural commodity?
Grain.
Wheat.
I think seeds.
Okay.
Seeds, yeah.
So, I mean,
sure.
grain,
Close enough.
seeds, yeah.
Yeah.
Farmers borrowed seeds to plant, repaying the loan with seeds from the harvest.
Pretty cool,
How
huh?
about that? All right. The word bank.
It was so simple back then.
I know, those were the days, huh?
Yeah.
Were you alive for that?
Well,
Yeah. Yeah. Okay. For the listener-only audience, James just touched his beard. That's what he did there. Okay. The word bank is
you know,
derived
they
from
might
the,
be listener only for a reason.
What is the reason, James?
You might have just like ruined that for
What's
them.
the reason?
Moving on.
Okay. The word bank is derived from the Italian word banca, which refers to what piece of furniture that moneylenders sat on in medieval market squares?
Tables.
Benches.
James, a bench. You got it.
Nice.
Nice.
All
There we
right.
go. All right.
We are keeping score.
One for
I
a
was,
million.
you know.
Great job, James. Okay. So, Adam, Rate Tracker as a whole is where I want to start. I know Rate Tracker does a lot of things. So tell me from the top down what Rate Tracker does, all of the other things that Rate Tracker does, and then we'll get to Score at the end and we'll hone in on Score.
Sounds good.
Go.
So our primary bread and butter is merchant services. It has been ever since. I think it always will be. We 3 years ago, we added business lending into the equation. And the main reason for that was because we had a lot of people asking us, hey, do you guys offer merchant cash advances?
Okay.
Sorry. I should note, Adam is the founder and CEO of Rate Tracker as well.
Yeah.
I forgot to say that.
Yep.
Founded 5 years ago.
November 2021. Yep.
Perfect.
Okay.
All right.
I've
Continue.
been in this industry since Valentine's Day of 2014, and I still feel like I'm just getting started. But so merchant services is our bread and butter. We, throughout the last few years, just like everybody in the industry who's growing and not dying, we've decided to sell more on like a tech first basis and not just commodity sales, right?
James loves that.
I do.
Yeah.
Yeah.
Yeah, dude.
Right
I
up my
mean,
alley.
Yep.
I don't know about you, but I value my time and I want to
Oh, yeah.
build a legacy. So it's and create a lot of impact. And I don't think you can do that if you build on the sand, right? So if you build on the rock, right?
If there's two things, I have two pet peeves in life. All right.
Trivia.
I hate being late. All right, I
Yeah,
can't stand it. If I'm not 15 minutes early, I'm late.
Okay.
Starting to realize now that I've got 3 kids that there's going to be times when I'm late. I'm biting my tongue on that one. Second pet peeve I have, I hate wasting time.
Dude, yeah.
I don't want to waste your time. Don't waste my time.
Yep.
So I can agree with that.
Same here, dude. So can we cut his mic, please? No, I'm just kidding. All right, so
I've been asking that for weeks.
I'm just kidding, dude.
Anyways.
He's like, I'm gonna punch you after this episode.
Okay.
So merchant services, right? Like, and obviously, like that's this what we do, right? Main bread and butter, right? Recurring revenue, growth, all that's great. And throughout the years, like up until we actually started doing lending, I realized, okay, these people are asking us, do you offer merchant cash advances? That was like the only thing.
Yeah.
MCAs. Do you offer MCAs? And we had worked with a couple people in the past, like tried to refer it out, didn't really fully grasp what we were offering or what they could do. And it always ended up poorly. So I had this fear in my mind of offering capital services, or business loans, line of credit, SBA, thinking that it would ruin our existing client base and people would get mad and all that stuff. But then I realized, like after doing research, that we were just kind of scratching the surface of what's possible, right? So I can get further into that later in the episode when we talk about SCORE. But merchant services, business lending, point of sale systems, we've developed software in-house, and we what else do we do? I mean, those are the main things, but you know how it is in our industry, like you find yourself doing things for merchants that are outside of the general scope.
All the time.
Yeah, and like it's
James.
Dude, it's totally fine because like you can create value for somebody, whether they're a partner of yours, an employee, a merchant, whoever, in so many different ways. And a lot of it just comes down to like wanting to do it for that person.
A lot of that extra stuff is just opportunity.
Yeah, dude, exactly. Yeah. Sometimes it's like you should stay away from that. Like we don't really like to do like the IT stuff and like wiring cables and stuff because there's potential liability there. But we'll help. Like we, go above and beyond and serve the merchant. Those are the main things that we do. The name Rate Tracker comes from our software back in, I think it was 2000. Yeah. No. End of 2000. Back when, not 2019, September of 2019. When businesses usually paid the processing fees still at that point. I sold for Heartland for 5 years. And before I left, they were the good guys. They had, transparent, fully disclosed interchange plus pricing and different type of sale typically than it is nowadays. Most of the time it's dual pricing now, right? So what Rate Tracker does is it helps business owners monitor their processing fees. If they still pay their fees, which most people really don't do that anymore, they either do a dual pricing, surcharge, or cash discount, compliantly or non-compliantly, right? Let's be real.
Watch our cash discount episode or dual pricing episodes about that.
Yeah, that's a whole other story right there.
Anyways,
most of them are non-compliant still. Let's be real.
That's what the conversation was.
Yeah, it's interesting. It's a very dynamic time in our industry. But I digress. So, I always thought, like, why not just do good business? Treat the merchant with respect. Give them fair pricing, so it's fair for them. Competitive for them, fair for you, the person that's doing the work. And then stick to it. Yeah, you can like make sure that they understand the value that they're getting and don't race to the bottom. But like before the dual pricing days, it was that game of like, I'll do you at 5 and 5.
Undercutting left and right.
Yeah, and then like you start them at 5 and 5, and then interchange is inflated. There's a PCI fee that comes in there, and then all of a sudden it's like 105 and 5. Like it just happens. And so I always thought that was wrong. And that's one of the reasons why I started my own ISO was because I could control the pricing and made sure of that with the partners that we selected, the back-end processors. And we built software that has a Plaid integration, and it can go back 24 months, and it creates an effective rate graph for the merchants. It's not as relevant now anymore because people mostly don't pay the fees, and like we've kind of gotten away from the rate side of the equation. It's more about tech, service, and then pricing, right? In our opinion. And so it's evolved into what we call SCORE, which I can harp on that, later when you ask me. But I thought that the industry should be all about integrity. It's so easy to lie in our industry.
Oh, yeah.
And like,
talk about that all the time.
Yeah, dude. And I want to do good business with great people. That's the thing. And I think that if you can, we've won a lot of great referral partnerships, banking relationships, agents and merchants, because they see like, okay, we believe in integrity and not just like putting your best foot forward now or giving a fair deal, but sticking to it. You know, like I believe in that. And most people don't pay the fees anymore, so it's not as relevant, but I'm proud of that software. We've evolved as a company since, just like the industry has, and it's becoming more of a big picture play rather than just tracking fees.
Okay.
Tracking rates.
So speaking about fees, I'm going to divert just a moment here.
Please.
Because you've mentioned a few times about being relevant and also how, you know, with the cutthroat industry that we're in and the race to the bottom, and, you know, we've had surcharging and cash discounting and a lot of that being non-compliant. We've got dual pricing now. Where do you see this evolving to the next step? What comes next?
I think just like we've been saying, technology. Because like, you know, Kermit mentioned earlier on the episode that if you're offering an awesome technology solution that solves a problem or makes that business owner's life easier, helps them sleep better at night, helps make them more money, like who cares what your pricing is? Obviously, it's got to be within reason, but you can earn a fair margin on the volume if you create value during the selling process, during the onboarding phase, and then after the sale, right? You don't have to have the lowest rates to win business anymore. In fact, I would caution anybody in the industry that goes around selling on price, stop doing that, because you're commoditizing yourself. And like, I don't know about you, but I value my time.
Devaluing yourself by doing that.
Yeah. I don't want to sign a deal so then 6 months later it can just get replaced by some random guy off the street that can do it for, you know. But if I have a full-blown solution specifically for a vertical or that is well tailored to that business's needs, I give them great service, they trust me, where are they going to go? I mean, dual pricing, if they're already doing it, cash discount, surcharge, they're not going to leave for a lower rate, and they're not going to run their payments outside of that system because it's just way more efficient for the business and secure and reduces friendly fraud if you just run it all through the tech. That's how we make money, is the payments, and the tech is the moat that surrounds that money.
That's cool. I like that.
That was good.
Yeah.
That was good. Okay. All right. So you referenced it. We've referenced it. Let's narrow it down from Rate Tracker and everything that Rate Tracker does to Score. Tell us about Score, where the idea came from, where it is now, where it's going.
So Score is a real-time financial health platform for businesses of all kinds, right? About a year ago, we acquired another ISO, and that deal took a year to get done, from when I had the first conversation with the seller to him getting his wire, right? We went at SBA 7A loan for that deal. I was told it was going to take 90 days. It took 7 months. And it was very grueling. It was very agonizing because on one hand, trying to grow my business, run it, manage it. At that time, I had a much smaller team. We've grown since. And it was definitely like something like, looking back on it, I would have done that whole process differently. But I also made decisions because I was told by the lady at the bank that it would take 90 days, right? Which is pretty standard for a lot of SBA loans, right? They take longer than like a typical term loan or MCA or some, quick, dirty financing solution. It was a lot of money, so I wasn't going to go that route. I wanted to do like a longer term, lower interest deal. And that's what the SBA offers. And so from the point of us signing the paperwork to getting the financing, that was a 7-month process. And what I did was I hired a bunch of people in the fall, like 3-4 months before the deal actually closed, because I was expecting to get a big windfall of cash flow. That didn't happen. We were bleeding like $30,000 a month, and I funded it myself to keep the business flowing and the lights on and all that stuff, because I wasn't gonna, cut people or remove expenses for my own mistakes. I figured I would just eat that. And I did, right? And it hurt, but I also learned a lot from that experience. And the one thing I learned a lot about was money, how to manage it, accounting, bookkeeping, budgeting, all the stuff that most successful businesses do. And then I realized further, I'm like, wait a minute, there should be something that's free and that's available to all business owners so that they can at least understand money better, because they don't teach this stuff in school, and they do that by design. And most small businesses that haven't scaled, There's a bunch of reasons for that, but one of the things that I've realized in my almost 12 years of serving small businesses is they stay small because the owners, the operators, the people in charge are usually money illiterate. And
Did you say they do that by design?
Yeah, like the education system.
Why do you think that?
Because they want us to be obedient people that just plug into the system.
Yeah.
And they, it's a competitive world at the top, right?
Yeah.
So
On another episode.
Yeah.
Okay. Sorry, continue.
I can tell you all about that.
I like what you said there.
Yeah, it's true, dude. And so,
Yeah.
so from this process, it was very painful and all that, but like we got the deal done. It was a great acquisition. We brought on 4 new employees. It's a lot of recurring revenue every month. And I realized like, hey, this product would be a great thing to offer for free. We launched it, people like it. And then I'm like, we could take it a step further and then integrate our business funding solutions into it. And we've turned it into like a basic platform. It's called Score that anyone can sign up. You can upload your P&L, bank statements. It analyzes everything and it gives you a score between 0 and 100 to tell you how your business is performing and whether or not, first and foremost, whether or not should you even borrow money at this time. Because people reach out to us and they're like, oh, I need $100,000 because of inventory, or I need this for growth, or I just need to stay afloat, or I'm trying to pay off another MCA. Don't borrow more money. You should just run your business better. Make more money, create more cash flow, pay down debt. And we use a bunch of various different, what's the word? KPIs that essentially create this score. You want to be above 80. Being above 50 is cool, but if you're below 50, it's definitely not a good situation. And it's essentially like the Credit Karma for small business. And the intention is to educate the masses, empower people, because once you can connect your stuff to it, you can either upload statements, connect to Plaid, and it will give you like a detailed like 5 steps that you can take right now to improve the financial health of your business. And then if you want to unlock funding and if you want to be able to borrow money, here's what that looks like in a 30, 60, 90-day plan.
So you mentioned that the merchant can upload different types of files, like PDFs, for example. Is there a specific format that you take from that for like the spreadsheets or the PDFs? For example, a lot of merchants are moving nowadays to ISV-led payments behind software walls.
Yeah, right.
And so, I might have merchant A on this platform, merchant B on this platform. If they get PDFs from each of these, is your software intelligent enough to recognize from both, or do you only work with specific partners?
You mean like the
actual format
like the vendor
of the document?
Yeah.
So it looks at things like if you want to upload, say, 6 months bank statements, it could give you an assessment based on that, right?
Okay.
If you upload your P&L alongside of a balance sheet and your tax return, it can include all that together.
Okay.
If you upload everything you got, it's going to give you a very clear picture. Is that what you're asking?
Yeah, I'm just trying to see like how smart it is with like different file types from different sources.
Yeah, it can take PDFs and spreadsheets and XS, what are they called? XLV or whatever the title is.
Yeah.
I don't know. Difference, yeah.
XLS, CSV.
Yeah.
I didn't build it, but
it,
we have an
CSV.
amazing team
Okay.
on the behind the scenes that
It seems pretty open in that regard.
I mean, I've
Yeah.
never heard
Which
of
is cool.
anything like that.
Thank you.
Um,
Yeah, it's
Bit of an AI element behind
yeah,
it.
of course, yeah. And there's like
Okay.
a proprietary algorithm that creates the score, and then okay. So one of my core values is long game, right? So long game in everything I do with my health, with my family, with my business. I don't want to just like get you in $100,000 MCA, merchant cash advance, and make 10 grand, because that happens. People make $10,000 on a 100K
It's common
loan.
in this industry.
Yeah, because they're quick, dirty, and easy and
You just
profitable.
move on to the next one,
Yeah.
sign them up, move on to the next one.
Yeah.
Never hear from the guy again.
Yep. And like what we care about is like getting the money into the business, if and only if the business should borrow money. The owner has a plan, and there's a really good chance that they're going to actually succeed from that loan. Dude, a lot of MCAs out there, like it's like a drug for the business. You get one,
Yeah.
and then you pay it back over like a 19-week period. It's daily debits, and then your business gets starved of cash flow. And then what happens? You need more. It's like heroin, right? And I hate to say it, but like it's really great for the lenders, terrible for the businesses. So like, why not just educate in the beginning and then make it easy for people to like actually decide, should I borrow money? Okay, yes. Here's what you would qualify for based on your revenue, profit, time in business, business type, what you want the money. Like it's not just like, oh, here's an application. I don't want to do business that way. Like, and like with every product, every solution we offer, and just as in general, like I'm always looking to decommoditize what we do. That's why we don't go out and sell terminals and just interchange plus deals and, I can eliminate your fees on dual price. Like, no, it's like, let's start with the tech. Let's get humans involved. Let's make this actually like a viable solution that gives you, the business owner, a better life, not just, get the capital now. Because then 6 months down the road, you're going to regret it.
Right.
Yeah.
So when people are listening or watching this episode, Score is out and available on the Rate Tracker site.
It's like I can't remember the word, subdomain on the site. It's just score.ratetracker.io.
There we go. Okay.
Yeah.
How long have you been working on it?
A year. Ever since we closed on the acquisition.
Yep.
I really didn't take much time off because, just like kind of how I roll. But we started developing it immediately. And then it was one of those things where we started using it just to use it, and like merchants resonated with it. We were kind of testing some things, feeling what people thought. And then I'm like, well, why don't we like make this be the forefront of our lending solution? It's literally like our point of sale for funding. That's how I look at it. Because again, we're not a commodity. We're actually going to take the merchant on a journey. We're going to empower them. And the goal is to help them scale or just help them achieve their definition of success, whatever that looks like.
Right.
Most businesses that do less than $10 million a year, from my experience, in revenue, they remain small because the owners don't fully understand money, how to use it for growth, and how to like de-risk their business. There's a thing called the debt to EBITDA ratio. How much debt do you have compared to your EBITDA? And if it's more than 5, you're in a bad spot. If it's less than 3, you're probably good. Depends on what you're trying to do. If you're trying to grow, chances are you might have a little more debt than normal, but like that's kind of just like the risks you take when you try to grow. There's more to it than that. But
Right. Okay. So where do you see Rate Tracker or even Score going 5, 10, 15 years from now?
I want it to, so kind of like what Credit Karma did for the consumer. I see it doing that for the business, for businesses, because, do you guys have Credit Karma?
I do.
Yeah.
Okay,
I don't look at it, but I do.
Yeah, right. It's one of those, you don't have to.
It's one of those things where I signed up like a couple years ago and I still get the emails because I haven't hit the unsubscribe button yet.
Yeah, it's a great case study here. But it's one of those things, dude, where like, it is if you were like actively concerned with fixing your credit or monitoring your credit lines or getting another credit card, whatever you're trying to do, then you would look at that and think like, I'm gonna check that almost every day. I log on and it's not even accurate usually, but I'll see like
I remember I track my finances, but I just do it on my own in a spreadsheet. I know it's old school, but I tried a couple of those track my stuff apps, and it's like, this was not work. This wasn't dinner. This was the gas station. Like, I know that's not in the wrong bucket.
Yeah.
Do you have Rocket Money? Do you know what that is?
I have tried that.
I use Monarch.
Dude, I took 30 minutes one day and I just like went in and I categorized like a lot of my transactions. And it's really helpful because one of the things I do every morning is I check bank accounts and different things. And then I realized like probably a year ago that I could just log into Rocket Money, click transactions, and it sees every bank account, every credit card. Doesn't see like money market accounts or investment accounts unless you plug them in. Yeah. So, but like, if you have a lot of activity in and out, like you should check that stuff every day. And like, again, it goes back to the whole like financial awareness thing. Like a lot of business owners, like I'm sure there's people watching this podcast that, you sign up a merchant and they might not do volume every month. They might be like a construction company or like a low frequency, high ticket business. And maybe they haven't run anything for like 6 months and they actually switched away from you, but you just don't know it. Yeah. They're on your attrition list. You didn't really reach out, whatever. And then they realize that they've still been getting billed because their accountant told them that. And they're like, I want a refund. It's like, dude, you don't check your bank accounts every month, like every week, every day.
More often than you would think.
I know.
Oh yeah.
It's scary. I wonder like how do these people actually run businesses?
Dude, exactly. Like, and that's the thing. Yeah. Because like sometimes too, like if your business is not succeeding financially, a lot of people will just avoid it. Like they'll run from it. They don't want to see the bank account. Like I think you should look at that every day if you're failing.
Back in my early days in the industry, I was working tech support for a company, and we had a merchant one time. This is on the old school terminals because the terminals nowadays will auto batch after a certain amount of time, so you don't lose the funds. This was before that. And so this merchant calls up and he's like, you know what? I haven't received a deposit from my batch in almost a month.
I think you told me this story.
Oh God!
And I'm like, 4 weeks have passed by. How have you not looked at your bank account? I check mine every day when I get up in the morning. It's like, it boggles my mind.
It's crazy.
So
Yeah, dude,
the
learned that
world that we live in today is crazy.
selling, especially when I was selling S&B restaurant, the people that are getting loans to open restaurants that don't know, like, oh, I have to pay taxes on this, on the equipment. Like, they're like, oh, I have shipping? What do you mean I have to pay ship? Like,
It's
you
making
got
me,
a loan?
it's making me feel like I should go out and,
What?
and try this myself, because if they can do it, then surely.
Yo,
so
you
can
definitely
I,
could do
right?
it.
Well, dude, that's the thing. Like, so going back to the acquisition, that was a multi-million-dollar SBA loan that like somehow I qualified for. But it took 7 months from the date of like when the seller and I agreed on terms and we got the first document done to actually getting funded, because I did everything wrong. It was like baptism by fire.
Yeah.
And it was one of those things where like, my hair used to be brown, bro. I'm not going to lie. And now we got the deal done, thankfully. Like, I don't know how that worked out, you know? But it made me realize, like, I didn't know any of this stuff going into it. And here I am trying to buy another company. Business was great. Things were awesome. Like, we were growing. And then this move was big. You know, it helped us almost double, right? In terms of, you know, volume, revenue, all that fun stuff. And I want to do more, but like it helped me like grow up as a business owner. And then I'm like, I want to create that for more people, and I'll make it free so that it can be like education for the masses, because they don't teach this stuff in school. Yeah, like you said, or like I said. Yeah.
I think you didn't finish your thought on where you want SCORE to go.
Oh yeah, so I want it to become like the Credit Karma for small business. I want it to help America prosper more, right? If small business is the backbone of our economy, I'm pretty sure it's over half of our citizens are employed by a small business, which by definition, I believe, is a business with less than 500 employees. So maybe not like the typical merchant services client of ours, but you know, if it's a small business doing like say $500,000 to $600,000 a year in revenue, that business owner is either growing or like they're just kind of like running the business, and they're going to have a lot of hats that they wear. And I want money and money awareness to be something that is at least not automated, but easily accessible for them, because like I genuinely want the merchant to win. I genuinely want the people that service the merchants to win, because I think if small business is successful, then America will thrive. And I believe that our nation is definitely in a unique time right now. And if these big corporations continue to like suck the money out of communities, and like I think that it needs to be, you know, keep the money on Main Street, you know, and that's where I see it going. I see it also being like the what's the word? The forefront of business loans. Like if you want capital, you're going to go through SCORE, because SCORE will actually help you make an informed decision. And it's not designed just to make money. Yeah, we want to make money. We want to create revenue, build, you know, a big business and help a lot of people. But it's more about like being altruistic for the merchant and actually helping them achieve their goals, instead of just ensnare them into an MCA. And I use the word ensnare because that's a diabolical term. There's people that will tell you that debt is the devil. And I think that there's good debt and bad debt, just like what they say. Yeah. And as long as you understand what you're getting into and you have a plan and you execute, it doesn't have to be the devil.
Yeah. All right. Well, I think we are good, James.
Yeah, this was fun. Thank you, Adam, for coming on.
Thanks you for joining us. And like I mentioned, we've got a bunch of other episodes with Adam coming out, so watch those if you haven't already. But thank you again, sir, for joining us. James?
Thank you.
Thank you as always.
And we'll see you next time.
And thank you for joining us on this episode of
the Paycast Network.
Look at that. Nice. Synergy, Ian. That's what that's called.
Synergy.
Literally. Literally.
That was good.
That was good.